Hey guys, welcome back to the next video. That was, of course, my brand new theme song for the recording. Hope you enjoyed it. So today, or in this lesson rather, so this is our second lesson, what we're going to be looking at is goods and services tax, also known as GST, and we're also going to be looking at some profit and loss. So again, building on last lesson, that's what we'll be looking at. So I will be calling this, it's still percentage increase or decrease. We might just whack a 2 next to it. It's the second one, second part of the lesson. Alright, so GST, I'm sure you've all heard of it before, also known as the goods and services tax. We'll make that a heading, goods and services tax, GST. So the goods and services tax is a tax that's added on to pretty much every goods or service that you purchase in Australia. So currently, GST sits at 10%. Different countries might have different amounts of GST, and essentially this money is used by the government for all different sorts of things. So it might be to do with, some of it would be funneled into healthcare, some of it would be funneled into maintaining roads, some of it would be funneled into payments for people who require payments. So in Australia, we're quite fortunate. They keep it fairly simple for us. So when we take something off the shelf, let's say at IGA, we grab a packet of chips, and that packet of chips is $2.15. That price already has GST factored into it. So we don't really, in our day-to-day life, unless you're dealing with running a business where you have to keep track of GST and do your part in getting that to the government, that's a little bit different. But in usual day-to-day life, it's not really something that we have to consider. But in countries like Canada, they don't actually tell you the GST on particular items. So last time I visited, the number of times I made it to the register and realised that the money that I had in my hand was not the correct amount because I had to factor in GST still, it was just amazing. I just didn't learn. So, as I said, GST is currently 10%, and part of knowing that it's 10% is that we can work out how much money of the item that we purchase has to go to the government in GST, and yeah. So as I said, we're pretty fortunate in Australia with GST. It's all given to us, but we still got to learn about how we can calculate how much GST we need to add on to an object that doesn't have it added yet, and also how to work backwards from an object that already has GST on it to what it was pre-GST. So we'll jot down some notes. So GST is the tax added to goods and services. Currently it is 10%, and in Australia is already added to the price of goods and services. In other countries, they don't always account for it. So, I thought I was thinking about how we might set this up. Um, so an easy way of working out what pre-GST and post-GST prices are, I think we can use this little diagram. So if you write pre-GST to the left and post-GST on the right, so we're talking about before GST is added with pre-GST, and then after GST is added for post-GST. So essentially, what we need to do is, when we're going from a pre-GST price to a post-GST price, we have to add 10% on, which means it's kind of like the equivalent of timesing by 1.1. And so I'm just going to draw in brackets in red. You can add this if you want, but you don't have to. It is 100% added with 10%. So let's say the object that we want to buy, let's say that it's a new pair of shorts, and the value of those new pair of shorts before GST is added is, let's say, $7. So the shop who needs to pay GST, they need to factor that into their price. So they're going to add 10% on. 10% of $7 is 70 cents. So post GST, after GST has been added, that pair of shorts would be $7.70. Now when we go back the other way, we just have to do the opposite. The opposite of timesing by 1.1 is dividing by 1.1. Actually, I kind of like that. I might keep it there. So, when we go from pre-GST to adding GST, we times by 1.1. And when we go from GST already added back to the original price pre-GST, we divide by 1.1. Now I think that's just about all we have to talk about. So we'll do a worked example next. So we will do our worked example. Now I think we're up to worked example 4 off the top of my head. So we will talk about the price of what do we want to buy? Let's buy a tennis racket. The price of a tennis racket before GST is added is, we'll say, $73.45. $73.45. And we need to determine the price of the tennis racket after the GST is added. After GST is added. Alright, so same as last time, I'm going to break it down into two different options, and you guys can choose whichever one works better for you. The first option that we're going to do is we're going to work out what 10% of our price actually is. So, 10% of 73.45 is equal to 0.1 times by 73.45. Now 0.1 is a nice number. All we do is we just slide the decimal point across. So it's going to be 7.345, but we can't have a thousandth of a cent. We only deal, oh sorry, it'd be a tenth of a cent because this is dollars. So we can't have three numbers after the decimal point. So this is going to be approximately equal to 7.35, $7.35 when we round it. Now, that's our 10%. So what we have to do now is we'll have to go post, what did they call it? GST, we could call it, or you could say after GST, whatever you want to call it. It would be the original price, which was $73.45 plus $7.35, which is $80.80. $80.80. Nice. Alright, now same with our second option. Going back to that conversion that we were talking about before, we could say that post GST, again, we could call it after GST, you could even call it sale price, I think, because that's what it would be. The post GST price will be, if we go back up here to our little conversion chart, if we go from pre-GST around to post-GST, we times it by 1.1. So it's going to be $73.45 times by 1.1, which, if you remember back to before, this is actually 100% plus our 10%, 110%, which is 1.1. Alright, just to keep that in the forefront of your mind. So put that in your calculator and you will get $80.80, like so. So it's just a little bit shorter. Now here, we're going to go back the other way with worked example 5. Worked example 5. And we're going to say the selling price which is inclusive of GST and we might talk about a cricket bat is and we'll say this is $130 for our cricket bat. And we need to calculate the price of the bat before GST. So we're going to go back to our diagram. Oh, I'm jumping the gun a bit. We'll do it their way first. So this is option 1. This is option 2. So option 1 is actually, you know what? They only deal with an option 2 in the textbook. So let's just roll with that. So we've got our pre-GST price would be equal to, it is, now if you just remember your conversion table, I think that might be easiest. It's going to be $130 divided by 1.1, which is our conversion factor. So $130 divided by 1.1 is $118 and 181818, which we don't really deal with money with that many decimals, so it is $118.18. Easy. So we'd finish off with our therefore statement. Therefore, the price of the cricket bat before GST would be $118.18. Now the next little bit that I wanted to cover today is profit and loss. So when we're talking about profit, this is it's the amount of money made, after accounting for expenses. So if we go back to that idea from before of buying a pair of shorts for $7, now let's say that the shorts cost $7 and then we sell them for $10. We would make $3 profit on those shorts. So our expenses for our pair of shorts would be the price of shorts, and then if we had to factor in something like the shipping and all these other things, we would account for that as part of our expenses, and our profit is the money, the net money that's left as our in our bank account, I guess. So loss works under the same principle. So it is the amount of money, but it's not made. We'll say lost after accounting for expenses. And so essentially what I mean by this is, let's say we've got a clothes shop and they buy their pair of shorts for $7, and then they work out that on average every piece of clothing that they buy costs maybe $3 to ship, and they forget about that and they go, we're going to sell our shorts for $8 each, but they've forgotten about that $3 shipping. So essentially the shorts actually cost $10, but they've sold them for $8. Then they would have a loss of $2. Now the thing about profit and loss, is that they can be written as percentages and absolute profit or loss. And this kind of comes back to that idea of when we were calculating error, we had our percentage error and we also had our absolute error. So it's the same sort of idea. So in order to find our absolute profit or our absolute loss, all we do is we take the absolute value of our selling price, take away our original price. So to find absolute profit or loss is equal to the absolute value of the selling price take away the original price, like so. Now next, when we're finding the percentage profit or loss, it's equal to the absolute profit or loss from before divided by the original price, and this is times by 100 to make it a percentage. So for our final worked example that we're going to do today, worked example 6. The question reads like this. A vase collector purchased a rare vase for $560 and sold it 10 years later for $680. And we've got two parts. So the first part is calculate the absolute profit or loss. And B, we have to calculate the percentage profit or loss to two decimal places. Alright, so for this first bit, what we need to do is use our rule. So absolute profit / loss is equal to the absolute value of the selling price minus the original price. Now in this case, our selling price is what our vase collector sold it for, which was $680. And our original price is what he bought it for, or she, which is $560. So our absolute value here will be $120, absolute value of $120. Now if we had a minus sign right here, which we don't, but if we had a minus sign right here, that would indicate that it was a $120 loss. But because we don't have a minus sign there, it means that the absolute value of $120 is just $120. So therefore, the vase collector made an absolute profit of $120. Now part B, we want to calculate the percent profit or loss. So the percent profit or loss, we use the same rule, so percentage profit or loss is equal to the absolute profit or loss divided by the original price, I think it was. Yep, the original price times by 100. So our absolute profit or loss that we found out before was 120. The original price was $560, and we have to times it by 100. So what you get is the profit, the percentage profit or loss is 21.43, and then we have to put a percent sign there, percent. And we finished off with the therefore statement. Therefore, the percentage profit, now we have to make sure that we say profit, because we worked out in the last bit that it was a profit with our plus up here. The percentage profit was, or we'll say for the vase collector, was 21.43%. Done. Alright, so that sums up this lesson, so just to do a quick recap, we started off by looking at GST. We looked at our conversion chart, so converting between pre-GST to post-GST, and it was a factor of 1.1, so depending which way we go, we either times or divide by 1.1. We applied this to an example about a tennis racket and a cricket bat, and then we looked at profit and loss. Profit is just how much money we make after we account for our expenses, and loss is how much money we've lost after we account for our expenses and our revenue, whatever we made. And then we finished off with absolute profit and loss and percentage profit and loss, and then did another example. So make sure, guys, you go through, do some of the questions that I leave you, and I will see you tomorrow.